Welcome back and welcome to Tax Talk with Tax Guru. This will be presented here by Cpa Garg CPA PC, whose headquarters is located in Ashburn, Virginia. For most of us, tax season is never over. Most of us are always on our toes with the tax preparers all throughout the year. Hence, once the actual tax season arrives, we're not in a panic state. I say that's the way to go. Anyway, let's hear all that from our tax guru, CPA PC Cpa Garg, and let's see what he has to offer to us on this fine Saturday morning.
Good morning, DC. In last episode, we discussed about S corporation fringe benefit after the recent tax reform. In a couple of minutes, let me just recap and we'll continue the same discussion. First thing is, if you own more than 2% of the stock of a S corporation, your fringe benefit tax treatment is different than all other employees. Second thing, your spouse, your children, your parents, your grandparents, everybody will be treated as part of 2% or more stocks owner if you own the stock, especially for fringe tax benefit purpose. So, what we discussed last time is, first thing, health insurance. Can I claim the health insurance as a deduction? Answer is yes, as long as we plan properly. Second thing, we talk about health insurance reimbursement arrangement. You can claim as a deduction as long as you plan properly. Third thing was health saving account. Can I claim it? Answer is yes, as long as you plan properly. Fourth thing, disability insurance. Answer is again yes, as long as you follow certain guidelines and plan properly. So, those four things we discussed in detail last time. You can claim it, but make sure you follow all the rules and regulations. Today, we will continue with 6 stingy fringe benefit. Why I am saying you the word stingy? Stingy mean their benefits. If you plan not in a right way, you end up paying more taxes as compared to saving, because you own 2 or more % of the stock of the corporation. First thing, group life insurance. If you own a company where you have 2 or more % of the stocks and your company is paying your life insurance policy as like other employees, can I claim the deduction? Answer is maybe, maybe not. How good or bad it is? If you pay the life insurance premium from the company, it will be added in your box number 1 of the W2. What it means? You pay footer taxes and you can't claim it as a deduction. Second thing, qualified moving expenses. As you know, under the new tax law, you will not be able to claim moving expenses under Form 1040. Second thought comes, why don't go ahead and claim in my company? If I am the corporation, I am moving from one location to another location. I am also moving my company office. Let's say if you are the home office or you are the local office, you got the job in the new location. So, you are moving your office location also from one place to other place, and you are thinking, if I can claim moving expenses under my S corporation or no. Okay. If you own again more than 2%, this will be treated as a W2 salaries, not as a deduction. Having your S corporation reimburse you the more than 2% shared employee for moving expenses was and is a very, very bad idea. because you as corporation and you both are going to pay FICA taxes on this W2. What should I do? Main thing, if you are moving, your personal moving expenses pay from your personal pocket. Your company related moving expenses pay only the company related moving expenses from the company, not your personal household move. Third thing, transportation fringe benefit. Many times you see the company IRS tax code allowed $300 per month as a deduction, where you can have the commuter pass and all the thing, where company can buy it and employees can use it. Can you claim as a deduction? Answer is yes. Those commuter fringe benefit is allowed as a deduction as long as you don't own the corporation. If you own 2 or more % of the corporation, this is not your fringe benefit. If you pay from the company, this will be added in your income. So, simply if you own 2% or more, don't claim it. Next, meals and lodging. As we discussed last month, any meals and entertainment expenses incurred for the employees will be allowed as a deduction. On the same side, if meals and entertainment expenses are related to the owner who has a 2 or more % shareholding, this will not be treated as an expense. If you pay it, it will be disallowed and it can be added back as your W2 salary subject to what we say FUTA tax. That's correct. So, you will end up paying more taxes compared to what you are saving. So, simple, don't pay from the company account. Next part, qualified employee achievement program. Many times you are the corporation, you are doing very good something, your company pays you some achievement program and reimburse you something, gift cards or big gift card something. Will it benefit you as a deduction? Answer is, it will be again part of your W2. You cannot claim those as an expenses. Next part, qualified adoption assistance. Many times when you are adopting a child or something, the company reimburses you all your adoption expenses. Can I claim as a part of employer assistance? Many of the companies reimburse employees for adoption expenses, but it's not taxable in their hand. That's fine. Again, if you own more than 2% of the stocks, it's taxable in your hand. It will be part of your W2 salaries. So, there is no tax benefit when you are paying this thing. So, you may not be able to claim adoption expenses. Just go ahead and claim under IRS code as Form 1040. Don't claim under this one. Next part, qualified education assistant program. Other thing what I am going to discuss now, the benefit, the fringe benefit which beneficial for you or may not be beneficial for you. First thing, qualified education assistant program. The qualified education assistance program fails if more than 5% of the benefit is used by the shareholder who owns more than 2%. So, let us say this way, if you have a company, the company has a policy to reimburse your education assistance program and you are an employee, the company is paying all the employees. So, let us say you have 50 employees in a year where you pay $100,000 to different employees and reimburse the expenses. And you have a one employee who owns more than 2% of the stocks of the corporation and you paid $5,100 to him as an assistant program. What is going to happen? Your education assistant program fails the IRS regulation. IRS will not give you deduction of 100,000. So, whenever you are giving education assistance to your employees, make sure total payment to 2% stockholder or more should not exceed 5% of the total benefit. Otherwise, it's a disaster, not claiming as a deduction. Better just pay as a bonus payment in place of education assistance. Second thing, dependent care assistance program. S corporation usually implement a qualified dependent care assistance program, but if more than 25% of the benefit goes to the employee who owns more than 5% of the stocks, your program again failed. So, simple thing, let us say again same part. You have 5 employees, 2 of them everybody is participating in your dependent assistance program and 2 of them owns more than 5% or more. If their benefit is 25% or more, your program will fail. Even you reimburse to your all of your employees, your plan is legitimate and everything, because you paid 25% more to the ineligible stock owner or ineligible employees, your deduction will be disallowed. Next part, working conditions fringe benefits. Your S corporation can give some of the benefit under section 162, under section 167 to the employees as a fringe benefit, which can be disallowed. And you might have heard from effective from 1st January 2017 till 31st December 2016, all the fringe benefits, working condition fringe benefit are not deductible by S corporation. Till 2017 they were deductible, not after that. So, if you are paying, make sure you pay from personal account, not from the business. Paying from the business means adding into your W2 income, paying the FUTA taxes and everything, then again you are spoiling everything. So, some of the example you say people are using corporate on car for business purpose. Can I claim that one or not? Answer is, if you are using very small purpose, it's a kind of negligible. So, IRS may not treat this as a fringe benefit. So, make sure you are properly allocated all the expenses. Second thing, smartphone. Many of you have the phone from the company, and sometimes the phone will be small, but sometimes it's possible you have the phone for yourself, your wife, your kids, who is part of the company's employees. You are just paying everything for the company. Can it be disallowed? Answer is, it's a small benefit, they've not disallowed. Next part, no problem fringe benefit. What it means? Some of the expenses are still allowed to be claimed, where I'll explain in simple way. First thing, no additional cost to the provider or to the company. So, let us say you are the travel company, you are the airlines industries, you are the hotel industry. Those industries are giving a free room or discounted room to their employees. Can it be taxed as a fringe benefit? If there is no additional cost to the employer, nothing is taxable. But if there is additional cost, the answer will be different. Next thing, employee discount. Many of the companies are giving discount to their employees. So, let us say if you go to Walmart, Harris Teeter, or many retail shops, many internet provider, TV provider, they give discounted prices to all of their employees. They may get like 10% of the market price what they pay, or sometimes they get say 10% discount of whatever they buy. So, technically there is no additional cost paid by them. So, anything you are giving, it is not taxable. Many of the companies have a gym in their office. As long as gym is available to all the employees to be used fully, nothing is taxable. So, today we conclude about fringe benefits under new Trump Tax Act. So, make sure you are making proper changes in your tax planning. What you are doing until 2017 is not relevant. Make the proper changes and do not follow the same thing. Thank you.